Coming off the back of a week that's, of course, been dominated by US data, given the fact that we saw the latest CPI number coming in at 0.4% for the month. This week, of course, is dominated by the FOMC meeting. Are we finally going to see Jay Powell bow to Donald Trump's requests for lower interest rates? Well, that does seem likely. And alongside that, we have rate decisions from the Bank of England and the Bank of Japan. So a massive week ahead for the week starting Monday, the 15th of September. Like I said, a massive week ahead, and this is the overview from a top tier perspective. So these are the high value items according to Trading Economics for the week ahead, and we can see that on Monday we kick off with a focus on China. It comes off the back of a dour inflation reading recently, minus 0.4 on the CPI number. Well, what are we looking at in terms of industrial production? Expectation that we see weaker industrial production, but an uptick in terms of retail sales. Certainly right now, the perception is that China, whilst it is trying to build relations around the world, are going to have to rely on themselves to a greater degree. So retail sales will be absolutely important on that pathway. Then we have the latest jobs report out of the UK. So the highlight here is the unemployment rate, but we're also going to see the likes of the claimant count and alike on the week that we also see inflation out of the UK and the interest rate decision. Absolutely massive week for the pound and the FTSE 100 and alike. Then we've got inflation out of Canada, retail sales from the US. We've got that ZEW survey out of Germany. Wednesday, UK inflation, Canadian interest rate decision, FOMC interest rate decision and economic projections, Bank of England rate decision on Thursday, inflation out of Japan, then the Japanese interest rate decision, then retail sales. I mean, it's absolutely ridiculous how much we're getting here. And so by and large, it's quite difficult to really ascertain exactly where things are going to start and end because there's likely to be a lot of fluctuations over the course of the week. And so it's notable that people are going to approach trading in different ways. You might approach it from the perspective of wanting to get into a particular event ahead of it and try to gauge exactly what you think might happen during it. You might wait for the announcement to come out and try to trade the aftermath of it. You might already have open positions and you essentially minimize them or lessen them or get out of them ahead of these releases because you don't want that uncertainty. So what a busy week like this means for one person might not necessarily be the same for the next person. We're going to kick off, of course, with the US because we've been working towards this week for a long time, it seems. And certainly Donald Trump has been pushing and pushing for Jay Powell to cut interest rates. There had been calls for them to cut rates ahead of this meeting. That, of course, has not happened. There's been calls for them to cut by 50 basis points. That, of course, hasn't happened. Probably won't happen. But by and large, we are expecting finally to see a rate cut on Wednesday. And you can see that here. So 450 down to 425 expected. The economic projections coming alongside this. That's, of course, going to be key at a time where we're seeing the deterioration of the US jobs market. Of course, it really, well, I was going to say it started off with the weakness that we've seen in terms of the payrolls numbers when we saw that big downgrade to the May and June numbers. We saw a weak July number. But in actual fact, we've been seeing weakness elsewhere within the jobs market in lead up to those revisions. Certainly the ADP numbers had been weak pretty much since Trump came into power. And now it turns out the ADPs were right. And we've now seen the jobless claims on the rise, jumping up to the highest level in 4 years. Now, notably, this comes at a time when you're also having to worry about inflation. And so we've just seen the latest CPI numbers. We saw headline CPI at 0.4 for the month. That's certainly above expectations, higher than we would like. But markets really took it as, it's not necessarily too concerning. The Federal Reserve is still likely to act. The weakness of that jobless claims number that came out alongside it sort of overshadowed it to a large extent. We had seen sort of negative impacts from the likes of energy. This time around, it was a positive impact. So as long as we don't see a surge in terms of energy prices, blah, blah, blah. Essentially, markets still remain very confident that we're going to see interest rate cuts in the meetings ahead. Now, in terms of the inflation outlook, you can see here that we have seen over the course of August a rise in both headline and, to an extent, core, but it's largely flat. Both of them remain elevated according to sort of the norm, right? So if you look at where we should be, that's at the dotted line in the middle, around that 0.2 or just below 0.2 on a monthly basis. If we remain above that level, it pushes annual inflation higher. If we remain below that level, then it'll drive it lower. And so the fact that we've seen inflation on the rise to this extent is a bit of a warning sign. You can see the 3-month annualized figure certainly on the rise over recent months. So that does highlight some potential fears that inflation is showing its hand. Nonetheless, the Federal Reserve have said that they are willing to look through short-term tariff inflation if, certainly in my mind, if they see that it is a one-off factor and it's not necessarily something that's going to keep being implemented at higher and higher levels. So they need a degree of certainty, and certainly some of the deals that the US have made recently provide exactly that. There's still question marks around certain nations around the world, but we've just heard today, this is Thursday, that they've apparently struck a deal with South Korea. There's, of course, talks underway with China as well. So the more deals that happen, the more likely it is that the Federal Reserve are willing to look through near-term price pressures. Now, in terms of inflation, yes, that is a little bit troubling. It is on the rise, but we've not necessarily seen this massive spike that you might think would happen. In terms of market expectations for this meeting, 90% chance of a 25 basis point cut, and a 10% chance of a 50 basis point cut. So market's very convinced that we will see a cut. It's just what form it takes. Beyond that, you can see a move down to 375 to 4 at the next meeting, and then another one in the meeting after that. So market's growing increasingly confident that we're going to see rate cuts at each of the remaining 3 meetings this year. And essentially, we have a pathway lower at 25 basis points lower for interest rates at every meeting. And then we get into next year and things slow down a little bit. That slowing down in terms of the perceived pathway is also due to the uncertainty of exactly what the economic conditions are going to be further out. Maybe inflation does rear its head, and in which case they're going to have to pause. But certainly for the near term, lower interest rates appear to be on the card for the US. Now, in terms of the markets to look at, one market I thought would be an interesting one is the Dow. It's certainly a firm favorite for traders. And so we can see here, let me just go on to the weekly time frame, this rise through resistance taking us into record highs here. The daily time frame here, let's just, there we go. So the daily time frame highlights that breakup through resistance, and just a continuation really of this trend that we've got here. If I was to sort of tag on all your swing lows, you can see very clearly that we're just carrying on this trend. So each time you break through resistance, you then adjust for the latest swing low, and that's the level that you're looking at. As long as we don't break that level, then things are all good. And certainly as things stand, things are all good. So if you look towards the downside, the near-term swing low now we're looking at, it's 44958. If we break that level, then it looks like we could start to unravel some of this move. Until that happens, things look pretty strong here, and the trend still remains in play. So keep an eye out for, in my mind, further upside to come for the Dow Jones Industrial Average. You can see over the near term, it's a similar kind of picture, right? The creation of higher highs, higher lows. We've probably got a 76.4 fib in there. Maybe it's not as deep as that. So it's a deep fib just past 61.8. Sort of ascending triangle formation. So it's all just playing out really nicely here for US equities at the moment. And so when you're looking at a potential interest rate cut from the Federal Reserve, a continuation of that bullish trend does seem likely for now. Next up, let's take a look at the outlook for the UK, and we can see here that if we just jump into this view, there we go. We can see here that markets are looking at a whole raft of data points from the UK over the course of the week. We kick off on Tuesday with the jobs report. Unemployment expected to remain steady. Average hourly earnings expected to come in at 4.5, a tick lower. That is welcome, quite frankly. The employment change figure expected to pull back a little bit down to 150k. Then we look at the inflation report. Now, this is going to be a really interesting release over the course of the week. It comes on Wednesday, the same day that we're seeing the FOMC meeting. So a big day for markets on Wednesday. 3.8 expected on headline, 3.7, a decline expected for core. If you look at the monthly figures, that's what's important. Both expected to come in at 0.3, so above where we need to be, but not necessarily drastically so. Then we've got the interest rate decision from the Bank of England on Thursday and retail sales on Friday. So let's look at the inflation picture for the UK. Like we said, we're on the rise in terms of both headline and core inflation. There is a perception that we could see flatlining or lower inflation. And certainly if you look at the trajectory over the course of the past, that bottom section says 9-month annualized. I change it. It's a 3-month annualized down there, right? So if you look at the trajectory over the recent months, in actual fact, it has been pulling back. And that in part is in no small part because of the fact that we have that massive influence of the April figure that's made it spike upwards. But certainly it's below where we are at the moment in terms of annual inflation, 3.8, whereas the 3-month annualized, or the rate essentially that inflation's sort of trending at over recent months, is more like 2.2 for headline, 2.9 for the core. So things are seemingly getting under control to an extent in terms of inflation pressures. So keep a close eye out for those monthly inflation numbers. Certainly the Bank of England wants to act. You know, they will want to cut if they can, but if inflation continues to rise, they kind of had their hands tied. So you can see here, markets expecting a pause this time around, a pause next time around, a pause in December. And when are we going to get that rate cut, right? You know, we don't really have one priced in with any great certainty at the moment. So there's a lot of uncertainty. And a lot of that really comes down to inflation. And that's why the inflation release over the course of this week, or essentially on Wednesday, will provide the basis for the volatility within the likes of the pound over the course of the week in particular. So let's jump onto the chart for the euro against the pound. It's always one that I like to follow. So if we're looking at some sort of turn that makes it more likely that the Bank of England cuts interest rates, whether it's weak data in terms of the jobs numbers, whether it's a decline in terms of inflation or a weaker than expected inflation number, weak retail sales, those kind of things, right? If that comes out, then there's a possibility that we're looking at more weakness for the pound. Now, certainly we have now seen from the ECB, they've paused interest rates once again. They've essentially got to the end of their easing cycle. The Bank of England still has a whole runway ahead of it. It's just being able to gather a bit of momentum and get on that runway and get moving, right? So does the economic conditions, or do the economic conditions allow for that rate cut? Now, certainly if we look at the sort of trajectory over the course of this year, you can see that it is bullish, right? So but you're seeing at this, and you could say, you know, is this a topping pattern? Are we, you know, we've sort of, is that a double top? Is this going to be some sort of wonky triple top formation? Who knows? But essentially, you know, the wider perspective is that we're likely to move into a position where the Bank of England do start cutting rates in a meaningful manner at some point, and that should be beneficial for euro sterling. So do we see markets sort of front loading that? Well, you can see more recently the trajectory in actual fact is in this sort of recovery phase, right? So you have sort of intraday trends and then smaller intraday trends. If we look at this 4 hour, you can kind of see this trend coming into play. That means that it's pulled back, despite the fact that if you're looking at, say, the hourly time frame, you say, oh, we're seeing low highs and lower lows. You know, maybe it looks bearish there. But for me, you know, I see this as a deep retracement. So there's a chance that we do move higher once again, and in particular if the data sort of allows us to dream of an interest rate cut in the UK, so to speak. So look, this is your first deep retracement. That's 76.4 fib. This is your next one. This is now a 76.4 fib. So we've come into that same Fibonacci level. Let me just clean this up a bit. So we've come into that deep fib once again. You can see almost instantaneously, right, price action starting to pop. Well, that's not what I want to look at. There you go. So look at price action as soon as we come into that 76.4 fib pop. Coming back a bit now, but that certainly shows that there's respect of that level, and it points towards a possibility that the bulls come back into play. Like I said, markets aren't expecting anything in terms of rate cuts from the Bank of England. You know, in one way you could say, well, why would I start sort of looking for it to price for rate cuts when that's not what markets are looking for? At the same time, it's almost like the bar's been set in a certain level that it can change quite easily if you did see the data move in the right direction. Whether that happens or not remains to be seen, but keep an eye out for this 76.4 as a potential turning point for euro sterling if we were to see something that allows for a more dovish outlook going forward. And then finally, if we look here at the likes of the Japanese region, we've got trade data coming out on Tuesday. We've got the JGB auction on Wednesday. We've got inflation data coming out on Thursday. And then we've got the BOJ interest rate decision overnight coming into Friday, depending where you are in the world. This is UTC time that we've got on here. So inflation expected to decline. The core inflation expected to decline. The month-on-month figure expected to move a little bit upwards, but up to 0.2. Does that allow us to believe that BOJ are going to move rates? Very unlikely, quite frankly. Of course, the Shiba's on the way out. We've got a lot of upheaval, political uncertainty, fiscal uncertainty ahead of us. Doesn't necessarily provide the basis for a rate hike right now. Now, in terms of the outlook, in terms of yields, you can see that the bond yields have been on the rise. So that's another reason why they might be a little bit more cautious when it comes to raising interest rates. Inflation, well, we've seen the Tokyo reading already moving towards the downside, and that generally leads the nationwide number. So you can see that expectation of lower inflation likely to be something that we do actually see this time around, with a sort of turnaround in inflation levels, providing the basis for us to think that maybe they're going to be a bit more cautious. Who knows? But ultimately, when you're looking at the outlook in terms of the sort of Icon Refinitiv platform, they don't necessarily see a rate hike until perhaps the end of the year. That's a coin toss at 51%. More likely the beginning of next year. So a slow pathway higher expected for rates. Now, what's notable for dollar yen is that we're seeing it coming under pressure. That's, excuse me, that's not necessarily just a yen thing, though, certainly, because the dollar's coming under pressure off the back of that data that's come out, which is the CPI numbers and also the jobless claims numbers. So, but we've been seeing them, this pair essentially sort of consolidating over the course of the past month. We're coming back down towards the bottom end of that range. Let's look at a weekly time frame. So you can see here, we've got this sort of wider swing. We're within that upward swing, but now we've sort of just froze. And now we're in this sort of consolidation phase. You know, it's interesting because we love trading markets that keep going in the direction that we're expecting them to go in, and that we're trading in that direction. But arguably, the easier markets to trade can be ranges and range-bound markets, if only because you have very clearly defined entries, yes, but that can also be said for trending markets. But the exit, I would say, is easier. And I would say the exit within a trending market can be quite difficult to nail, whereas when you're within sort of range-bound markets, the exit kind of area or zone is pretty clearly defined, unless you're looking for a breakout, which generally I wouldn't necessarily do that much unless you're really trying to extend part of that trade. Nonetheless, as we're getting back down towards this support zone around the sort of 146.6 area, as we get towards that area, there is a good chance that we do see another move towards the upside, if only as a repetition of the moves we've been seeing over the course of the past month. So let's say, for instance, we were to look for a move down here, you know, if we come into the 146.67 kind of area, then I would think it more likely that we come back up to your sort of 148, 148.5 again, than it is that we break back down to the 146, for example. So the construct of trades within this kind of market scenario is probably easier to put together than one within a trending market, even if it is a very highly trending market. So a massive week. Look, you're going to see volatility on both sides of this trade in particular, right? The US dollar trading around the FOMC meeting. Then you've got all of the data coming out of Japan with the BOJ rate decision at the back end of the week. Sometimes it's good to try and analyze massively these events, and sometimes it's good to just be like, right, I'm just going to ignore the noise and just trade what I see on the chart. So again, different ways of trading this, but I hope this has been useful. It's going to be an absolutely huge week ahead. I'll make sure to continue to provide content on the Scope Markets socials. Other than that, make sure to like, subscribe, all that good stuff. My name is Josh Mahony, Chief Market Analyst at Scope Markets. Have a great day and a great week ahead. Thank you.